Trade Genius.
Hey guys, welcome back to another Trade Genius podcast. Philip here with my friend Bob Kudla, and we got a pretty important one today. We got to talk about this diesel shortage that, if you guys remember, we warned you about a few days ago. We were down to 25 days of diesel supply, and those are the stresses in the system are starting to show here. So Bob, get us into what we're dealing with right now with diesel and how that affects us.
Yeah, hey, thanks, Phil. So, don't want to beat a dead horse with this because you may need the horse to get around if this diesel shortage becomes more severe. But what I want to do is I want to actually take a step back, and you can lay this blame squarely on the feet of the Democrats. So, especially Joe Biden. So the first policy mistake they made was that they shut down the Keystone Pipeline, which would be bringing in sour crude from Canada, which is easily made into the distillate, called diesel. That's number one. Number two is they shut the country down for the pandemic, which then caused the refineries to shut down production. And in a lot of cases, they shut it down permanently because, once again, the ESG crowd and the Biden administration and the climate change sycophants have said basically fossil fuels are dead. And so the companies are like, hey, I'm not going to continue operating equipment that's no longer going to be needed. So they started to retire those assets. And then lo and behold, we come out of the pandemic and the world starts to come out of this depression. And you have a situation now where you don't have enough refining capability. And now we put ourselves in a situation where, for the first chart I want to show you, Phil, is the crack spread. And the crack spread basically is telling you when it lifts like this is that they're making more money from gasoline than it's costing them in crude oil. And so they rather produce gasoline than the distillates that make less money. And so it kind of exacerbates the diesel shortage. And so I just want to throw some charts at you just to kind of show you this is not an easy fix. And so we're in a situation now where the choice is going to be either gasoline or diesel. And so they put us in a situation where they're going to create chronic shortages in the end markets for either the trucks or the jets or the cars. And I think that's where the crazy people in the climate movement always wanted us to be in. But it's the other reason why we're probably going to have a red wave or a red tsunami on this thing Tuesday. And if they try to then take this to another level after we have these shortages, we can have a permanent realignment in this country from left to right, because people, they may tolerate this stuff if it's kind of theoretical to them, Phil, but once it becomes reality, then people start to vote their pocketbook. And just to show you here, this is from my neck of the wood, just flash these next two charts up together, is that the Colonial Pipeline brings up a lot of this oil. Remember, the Colonial Pipeline got shut down from hackers in 2021, is that you have shortages coming up into Pennsylvania and Ohio now. And then the next one here, this is like right out of my hometown. That's why I asked you to throw it on there. Here's Allentown, no diesel. And one thing about Allentown people don't realize, Allentown used to be, truck Bethlehem steel, that kind of stuff. But now it's like a major, huge truck distribution area. This is where you got traffic moving from the northeast to the southeast. You got traffic moving from New York into the Midwest, and so it's a major hub. Where 78 and 81 and all that stuff comes together is a lot of truck traffic. And if they can't get diesel, this thing starts to snowball. And that's my fear, Phil, is that we're going to create a problem that the Democrats have caused, and then they're going to turn around after this election, and they may try to impose some sort of national emergency on this and try to start doing rationing.
Wow.
And I think this could be problematic. You remember, this country, refining capacity is kind of regionalized, right? It's not easy getting stuff from California to other places, from Texas up to the Northeast. There's areas where it's kind of blocked. And some of the stuff you can't even move at all because the river barges are down because we still have a drought in the Mississippi. So, and these pipelines can only carry so much, distillate. So it's going to become, I think, a story that we're going to probably tell again next week. And I think the ramifications can be potentially dire. I'm not normally, this hyperbolic about this stuff, but if you can't move the trucks, you can't move the goods. Okay, and if you don't have diesel, you can't drive your farm equipment, and so it goes. And diesel is used in trains, so it's going to be really really interesting. I mean, these guys really screwed the pooch on us, Phil, and I think it's become a big problem. You have any thoughts on
Well,
this?
yeah. One comment was I heard the truckers say that if you get over a certain price on diesel with what we may see with this squeeze, that they're not going to be driving. That it breaks I guess the shipping costs and everything, and they're not going to be driving.
Yeah, unless they get some sort of surcharge on their, but then it defeats the purpose. I look at stocks like Amazon, Phil. I don't know how Amazon can continue its business model if the cost of delivery is going to become problematic for them.
Right.
And the only thing I can recommend to people now is that, kind of panic early here a little bit. I know it's hard for your own personal stuff, but you should probably get 60 days worth of things that you can't live without because you may not have it in 60 days. And so, start thinking about that before Costco gets the big run on stuff again. Make sure that you're good to go. I would say into the end of January until we can see if this thing gets sorted out at all. But it's a problem.
It's a big problem, and you can remember when the shelves are empty, that's when like things really start becoming a panic. So I agree with you. Be proactive about this now.
Yeah, and look, the Democrats are going to have nothing to lose after they take their shellacking. And so we don't know how vindictive they're going to get in terms of running the executive branch. Remember, Joe Biden doesn't run this country. Ron Klain does as chief of staff. And he's a partisan, and he's running it on behalf of other puppeteers behind him. So, what does he care? He gets paid anyway, and he has nothing to lose. And so he's carrying the water for basically the dark or the stealth politics that are behind the scenes here. So I expect some craziness to come out of this election. And I know you and I have been talking about maybe seasonals tell us after the midterms that we should get a sell off or at least a pull down. And I think it could be basically a sell the news event after Wednesday.
Yeah, and then because like this chart here on the cracked diesel, I mean that's gonna be tough unless they put a lot of liquidity back into the system. But then again, then they're fighting their inflation problem, so it's a rough one. And the bear market rallies that we've seen are in the context of a larger bear market that could run out to 300-400 days long, which this market isn't used to. But I think that's where our heads have to be at.
Yeah, and I think this is it. People are asking, well, what's the next step here? Hey, the Republicans are going to get in. This is good news, right? Well, yes and no, maybe longer term, but in the short term, there's going to be a lot of fighting. And if we start having these spot shortages of critical, critical fuels, then this thing can go down pretty fast. Because once the panic sets in, we're going to be like France was a couple of weeks ago, where people were waiting in line at the gas station for hours and days to get fuel. So I think it can get pretty ugly.
Yeah, so that's probably the biggest takeaway is prepare now, and then to a lesser extent on people's portfolios, you're still thinking a pure play long here on energy, oil, right?
Yeah, so our view is, and maybe tomorrow what we can do, because will be the election thing, maybe I'll go through a bunch of the oil charts, but my view on oil is 113 is my next number higher
Okay.
on oil, and everything's getting dragged along with it. And, you're going to see around the world there's going to be a plea for more energy production. That's going to lift a lot of the equipment companies up as well. So even at the prices today, the energy companies are still underpriced in terms of their cash flow against the price of oil. So you can see companies like ExxonMobil, it's gone from $80 to $114 here in the last month. I could see $200 next ExxonMobil.
Wow.
And so I see it double in all these still coming out, Phil, in the next 12 to 18 months.
Wow, that's crazy. But I mean, look at this chart. Yeah, not it kind of goes in hand with that. As crazy as it sounds, though.
Yeah, I mean, look, they, and especially the big integrateds, they don't make their money so in the United States, even though they're U.S. producers, and they make money whether it's oil or refined products. So they just work the model depending on how the spread is, depending on what they produce. So those companies are in really good shape, and you can see it. As on Friday, you had the tech companies starting to wiggle a little bit, and you can see now that with with Elon Musk basically lowering the boom on Twitter employees, that you got now Meta, Facebook is going to lay off thousands. I can just see Silicon Valley having a massive employment problem in the unemployment type of category. So yeah, so Phil, I pretty much want to talk about today. I just want to give people heads up. Look, he who panics first panics best. So start thinking about things that you may need or want, and just get ready for some shenanigans over the next couple weeks. But if you like what we do here, hey, like and subscribe, get the notifications. You'll help us with the algorithms at YouTube. The more people know about us, the more people are subscribed. The algorithm spreads us around to more potential viewers, and it just helps us grow the channel. So I really appreciate it. It doesn't cost you anything to do it, so you'd have our gratitude. So thanks, Phil. Thanks for having me today, and catch you guys tomorrow.
Yeah, thanks a lot, Bob. And guys, stay tuned this week because there's a lot of things going on. We got the midterms tomorrow. We got CPI coming. So every day we'll keep you up to date on what's going on in the markets. Thanks again for watching. Take care. We'll see you tomorrow.
Trade Genius.